Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We welcome back John Polomny, a voice that has become synonymous with deep dive insights into global macro trends, the global political hegemon, and their ties to commodity investing. With a no nonsense approach and a sharp macroeconomic lens, John has become a trusted commentator in the alternative investing space. Whether it's energy, agriculture, or precious metals, John brings a sober perspective grounded in data and historical cycles. We're thrilled to have him back on the show to cut through the noise and dig into where the smart money is headed next. John, thank you for coming back on the show.
Thanks for having me, Steve.
Yes, sir. Pleasure is all on this side of the table. Let's start out like we always do. And what is your macro view of the world economy and financial markets today?
Well, I mean, the continued, I guess I would start by saying, I had high hopes for the Trump administration when they came in. They said a lot of stuff during the campaign. It doesn't seem like they really have their act together. Obviously, I'm glad that they got the border at least shut down. But some of the things I had talked about on my channel and some other things about because of the entrenched interests and the various bureaucratic mandarins that have ensconced themselves in these various bureaucracies, and now you see what the judges, the uh, the economic policy and some of the other policies are being like they're doing everything they can. The deep state or the entrenched interests or the statists, if you want to call them that, because it's on both sides of the aisle. Not, Republican Party isn't necessarily behind Mr. Trump either. So I think things, give an example during the campaign, they talked about Doge cutting 2 trillion. Then after the election, it got down to 1 trillion. I think we're down to like 150 billion now. And I think the actual cuts are like 30 billion that they've actually achieved. So I'm disappointed, but I suspected that that would be an outcome that was, likely. And I think you're just going to continue to get bogged down. I mean, give an example. You have politicians basically, you know, this has turned into not what's, it's an example of what I said before. You're dealing with sociopathic personalities in politics, and people have reduced this down not to, this kind of goes into something else I've talked about. We don't have a homogenous country. We have competing interests, whether it's labor and capital, whether it's different racial divides, all these things. And we don't have the same society we had 40 years ago, 50 years ago. It's different. So you have a declining empire with different interests competing for a pie, and it's turned into a football game. It's not about what's best for the overall economy. I mean, who in their right mind, if you talk to the average person in the street, could be against finding waste, fraud, and abuse in Social Security and Medicare? But yet that somehow has turned into cuts. We're going to throw people over. We're going to bring in these people. And then you find that the opposition party that's out of power, it's reduced to defending gang members and murderers and criminals. This is just, and then, you have left-wing judges blocking deportations and all these other things, and people justifying it. But so I think, this is the mistake people make, that they think that voting is going to change things. It won't. So the long-term decline of the United States continues. And I think that anybody can put it into their computer and save it and peruse the U.S. debt clock, the little page you can bring up that has the debt and everything, and it's spinning like a top. 36.8 trillion is when I checked it on Saturday. And there's nobody, the recent bestest, biggest budget of all time that's currently winding its way through Congress is going to do nothing to cut spending. And so there is nobody going to cut spending. So this will continue until, we have a very fragile economy. I'm not one of these people that's constantly bearish or bullish, but eventually this is going to be a problem. And I don't know when it will be a problem. I'm talking about the debts and the entitlements. We could go on for hours. I've talked about this before with you, I think. And at some point, it's not a problem today. It's not a problem tomorrow, but at some point it will be a problem, and then that will be the only thing that matters on that day going forward. So yeah, I don't think that you can't change 40 or 50 years of corruption and deep state ensconcement by these mandarins and bureaucracies. Are too entrenched. You can't do that And the man never had 4 years. He had 18 months because you have a congressional election, well, in less than 2 years now. And Hakeem Jeffries will probably be, if the historical narrative takes, he'll be the Speaker of the House. When the Democrats take over, the party out of power usually does well. There's a very thin margin there in the House anyways. And then you're going to get bogged down in the last 2 years in all kinds of circus and different shines about impeachments and all this nonsense. So this is just you're at a situation now, I think, where the debt got downgraded by Moody's. That's all three rating agencies now have, uh, downgraded the debt. Does it matter? Not really. Again, it doesn't matter till it matters. But it should be giving people the view that you're in a situation where there is no lawmakers, there is no block of vote of people in the government that want to cut spending, and there's no constituency for cutting spending. Most people don't want things cut. There's a reason why the Defense Department spreads out all the spending amongst as many congressional districts as it can, so that there's a built-in constituency for ever increasing defense spending. And then you couple that with the military industrial congressional complex. I'm just using this as an example. And then, you pay Lockheed Martin for a contract. A certain amount of that contract is recycled back into the coffers of various lawmakers as political contributions. For example, Clown Johnson, the so-called conservative speaker, was actually found himself in the situation of defending stock trading by lawmakers.
I saw that.
As we all know, this should be something that should be bipartisan, and the overwhelming majority of people, voters, don't want lawmakers trading stocks, because we know from Human Action, and the book Human Action, we know from anarcho-capitalism, we know from human nature. Munger said, show me the incentive and I'll tell you the outcome. So if you're in a position where you are voting for certain legislation that can affect positively or negatively a particular company, why would you allow those people, if you own stock in the health insurance companies, are you going to vote for legislation that reins some of their practices in? Probably not. And as I remember, it goes back to Milton Friedman was on the Donahue show. People should watch this on YouTube back in the 70s. Very famous economist, and Donahue was a big liberal. He had a talk show. A lot of young people won't know it, but it's on there. And they were talking about this. He was talking about this exact same thing. And, he was talking about free markets and, all this stuff, how incentives work. And he's the guy that has the video about the pencil, what goes into making a pencil. So anyways, and how complicated it is. So anyways, Donahue asked him, but don't you think with all of the stuff that you've talked about and championed, that the greed and all this, and then he goes into, I don't know what you're talking about. The world runs on self-interest. And where are we going to find these angels that are going to order society for us? They don't exist. People operate in their self-interest. So if you set up a system such that somebody's going to benefit, this is why Drill Baby Drill worked in the initial stages of the shale revolution. All of the executives in those companies were incentivized not for cash flow or returns, to raise production. So that's what they did. They took on a lot of debt. They issued shares, whatever it took to get my stock options, hit that KPI. And so you had a big explosion. So incentives work. You raise the tax on cigarettes over time, over and over and over, and smoking goes down over time. We all know this. So that's an example. So there is, long story short, there is no, it's just going to continue to be a problem. And as we've talked about before, and I've talked about on my particular channel, there's only three outcomes: a direct default, which isn't going to happen; pay back the debt; stop increasing spending more than you take in; or debase the currency. So we know from the historical narrative that that's what governments inevitably do, is they debase their currency, because the people don't want the spending cuts, and the lawmakers aren't going to cut spending. Anyways, that's a long story short. The debt, it's not going to be a problem today or tomorrow, but at some point it's going to be a problem, and then it will be a big problem for everyone.
Okay, so you had high hopes, I think, like a lot of us, that the Trump administration would actually be able to come in and do something. But at current count, Doge's target was 2 trillion, and they've kind of conceded down to 150 billion. The real number is probably 30 billion. Who could be against waste, fraud, and abuse apparently a lot of politicians could be against that because they're profiting from it. And, this is going to result in a natural cycle that has taken place many times in many empires. And the U.S. is in a natural long-term decline right now, and we're living through it. And basically, the way we get out of this debt is one of three ways. We default, we pay back the debt, or we debase the currency. And if we look back on history and governments who have been through this, thousands and thousands of times, they choose every time to debase the currency. So that's probably what we're going to do.
More than likely.
Okay. All right. Let's move on to, well, while we're on this, interest rates. So what's your view on what's the Fed's next move? I've been seeing conflicting reports about they're doing stealth QE. They're not doing stealth QE. I put it out to my listeners over the weekend, and I got equal replies of both. They're definitely doing it. They're definitely not. Like, have you found anything on this? What are your thoughts?
I mean, in the end, they're going to do what they need to do. In the end, they're going to be they're going to be the buyer of last resort. I mean, I've talked about this before. There's a tsunami coming. The alarms have been going off for a while. Bessonette knows this too. $9 trillion in debt you have to roll this year out of the 36 trillion. That's more towards the end of the year, later out in the year, plus the 1.5 to 2 trillion, whatever the deficit is going to be this year. So 10 to 11 trillion dollars. Of course, interest rates are going to move higher. People are now catching on to the fact. I don't know if there's a stealth QE going on. In the end, they'll end up there. All roads lead back to that. Especially when the interest now is the third largest budget item. When you get to a situation in an empire where your interest is higher than the defense spending, it's over. It's just a matter of time now. So what I think is a danger is a Liz Truss moment. Something similar that happened when Liz Truss was elected as prime minister of the UK. She didn't last very long because she started trying to push all these tax cuts through, and basically the bond market revolted, and bond yields on UK gilts blew out, and she was sacked as the prime minister. And she's even warned Mr. Trump about this. And so, where are you going to get the money to roll this debt? Who in their right? We're going back to a situation that was kind of similar in the 70s when we were coming out of the Vietnam War and the Great Society. We were in a similar situation, although not as bad on to GDP, where bonds were called certificates of confiscation. Okay. Why what are we talking about? Because, in order to pay, they had to there was a big inflation going on, and you were losing purchasing power buying bonds. So who's going to buy these bonds? The Chinese? The Japanese, certainly not the Russians, maybe the Saudis a little bit here and there, but people can see people on the outside. This is the problem that we have. We have this Team America mentality, cartoonish mentality, USA, USA. Well, there's other people in the world, and they don't look at things the same way we do. They look at a declining empire, has no fiscal responsibility. Am I going to recycle my excess dollars back into over here where I don't think they have any intention of paying this money back with anything but debased currency units? And so, this is part of the problem that Bessonette and Steve Marin, who's another advisor to Mr. Trump on economics, people don't read these things or deep dive it. He was the one, this is what a lot of this trade stuff is about. It isn't necessarily about trade, it's about the currency and getting people to buy our bonds. Like the suggestion that if you want to trade with us, you have to buy these 100-year zero coupon bonds. Well, who in their right mind would do that, unless you're forced to? And so these bullying tactics and some of this other nonsense, I think, sounds good on paper. We're the biggest economy in the world. We're the biggest consumer market. That's true, but that's in decline also. So, people are looking at this and saying, I'm not going to take recycle my trade surplus into U.S. Treasuries because you have no intention of paying these things back with anything except for debased dollars. So I'm going to be coming out on the short end of the stick. So when you talk about interest rates, I think there's a chance that I can't put a P factor on it. I have no idea, but they may not be able to roll this debt. So I think, the Fed's an entity that shouldn't exist. It's more statist intervention in the economy. Just let the 2-year note tell you what the interest rate should be, let the market, but that's not going to happen. So the reality of the situation is these people have never typically been right about anything. They're always behind the curve. I have no idea what they're going to do, what they should do. Um, with all of the uncertainty around tariffs, we only have a 90-day suspension on, so we could be right back into. Bessonnet said that on the Sunday shows this week. We could be right back into Liberation Day 2.0 later in the summer. So there's a lot of uncertainty, and the Fed doesn't know what to do. It doesn't want to get caught out again by cutting rates too early and exacerbating an inflationary impulse from rising prices because of a trade, these tariffs and things. So I think they'll be late, but I think eventually they're going to cut. All roads lead to inflation. I mean, they're going to create currency units. They're going to have to buy the debt at some point. Maybe the Trump administration can cajole its so-called partners and allies into buying $11 trillion in debt this year. We'll see of issuance, but you already see rates are moving up. They continue to move up. The secular change was a couple of years ago. The 40 years of declining interest rates because of disinflation, because of things that happened, decline of the Soviet Union, oversupply of commodities, the dumping of all the cheap labor with China and some of these other countries. Those things are over with now. Those were the impulses that led to that several decades of declining inflation and then hence lower rates. Now that's reversing. Demographics are a problem. These tariffs, the geopolitical situation, you're going to have a multi-decade era of rates wanting to move higher because, again, the debt is not going to be dealt with. And so people are going to demand a higher rate. And then the U.S. government, then we can talk about how they're going to get into the fun stuff about yield curve control. You just can't allow that. I mean, what are you going to do? Let the 10-year blow out to 7 or 8, 9, 10%? The economy would have a deflationary depression. And so at some point you're going to see things, and I'm not the guy that thought this up. There's other people that are way smarter than me that have thought this up. Luke Groman talks about this. Other folks talk about it. There'll be yield curve control, and then there'll be legislation passed to force you to buy a certain amount of U.S. Treasury bonds with your 401k and pension fund money and insurance money, and they'll just steal the money. They'll run the inflation rate at 4 or 5% and keep the long bond at 3. That's what they did after World War II. Go back and read the Fed minutes from the late 40s. That's what they did. They'll do it again, and people won't have a clue because they don't know anything. They don't know what real interest rates are. They don't know what real returns are. They don't understand inflation. They think is higher prices. That's a manifestation of inflation. They don't know these concepts. And so they'll just be like, why is this just getting worse and worse for me? And I can't figure this out. And they just won't know. And they'll just steal people's life force, enslave them. You have a limited amount of time and energy on this earth. And if you allow the government to steal your wealth via these things, which is what they're going to do because they have no choice, then, that's my vision over the long term, several years, decades. But there's ways to protect yourself. That's why we talk about hard assets. This is going to be an era of hard assets, gold, things like that. So anyways, I droning on a little bit, but that's kind of my view on rates. They're going higher over time with periods where they'll probably pull back, but the rate chart will probably be from the lower left to the upper right until the government says that's enough, and then they'll come up with some scheme that they'll gaslight everybody on to do yield curve control.
Okay, so whether or not they're doing a tiny bit of, I'm trying to catch like 5 billion when their total balance sheet's like 7 trillion, and
It's irrelevant.
yeah, and but basically what they're doing is you see the interest rates going up. All roads lead to inflation, which will eventually it'll run away, and they'll have to do yield curve control, and they'll say this is the interest rate you're going to get, and you're going to eat it through your Roth IRA and your 401k, and the answer to that, so that you don't get steamrolled, is hard assets.
Yeah, the guy that really knows a lot about this and has been talking about it for about 5 years, this guy named Russell Napier. People should look him up. He talks about it. He isn't interviewed that much, but he talks about it. And he makes the point. People say, well, that will never happen. Well, who regulates insurance companies and pension funds and your Fidelity 401k? Well, the Congress does, and they'll just pass legislation. There's nothing you'll do about it, can do about it. So people should, consider that going forward.
Yeah, I'm trying to remember the Roman. I think it was Diocletian. He
Yes.
came out with his price edicts or something, or basically came out with a policy that said if you raise your prices, you're put to death. So
Yeah,
trying to battle inflation.
if you tried to abandon your, we can read Gibbon. It's all in there, the decline and fall, but it's like that thick. But anyways, if you tried to abandon your farm because it was no longer profitable, you would be put to death. You had to sit there and run the thing at a loss because that was you're going to see all kinds of wacky stuff. I mean, you had Bessonette lobbying Walmart to absorb some of this is starting to get into Peronism types. This is what you're going to have here. You're going to if you want to know what your future is, people listening, look up Argentina and Brazil in the 70s and 80s. That's your future. We'll stumble forward. People adapt, but it's not going to be the America that you were promised. It's going to be living in the Soviet Union in, the late 80s or before it collapsed. It's just in terminal decline. And if you're not, people are going to be seeking government jobs to get connected. Ayn Rand talks about this in her books. This is exactly what will happen. People will want to get a government job because it's a good job. You get good benefits, or, stuff like that. Entrepreneurialism will get strangled. You can't make plans for the future because you're running inflation. It's going to be a total chaotic mess. And, if there's ways to get around it, you got to stay smarter than them, but you have to be planning now for the future.
Yes, don't let the DMV run your life.
Exactly.
Okay, deep value, highest conviction bet. Mike and Mark both want to know, like, where do you see deep value? What current trade idea has your attention? What's your highest conviction bet for 2025?
2025. Well, I mean, I've been saying since late last year, or even into back in last year, emerging markets. Now I'm seeing everybody starting to get on that bandwagon. If you look at how they've been working, they're working fairly well. I also want to specify down to, for example, Latin America. There's a bunch of elections getting ready to happen down there. People can do their homework on it. And people saw what happened in Argentina. And if you look at the polls in Chile, which is, I think, the next one that has an election, in Colombia, which has an election next year, and in Brazil, I mean, leftism is out. And, as we know from Druckenmiller, we need to look at things for what they're going to be in a year to 18 months out, not how they are currently. And so if you get elections where the left gets tossed and you get a center government or center right, just the just that happening, the perception of that could lead to a big revaluation. And I think money's starting to go into a lot of these markets because, you look at a situation, how sustainable is it to have, for example, I think the last time I checked, the US was like 25% of the world GDP, yet its equity market represented 70% of the total market capitalization of the world. It's
Oh,
not,
well,
that's overvalued. And
yeah.
so there's plenty of places that are undervalued. And that's the whole thing that I talk about in the Actionable Intelligence Alert newsletter. Sell overvaluation by undervaluation. We know that there's going to be a bias. It's not just the United States that's in debt. The entire world is over indebted, especially in the OECD countries. They've made promises that they cannot keep. All roads lead to inflation. So in an inflationary environment, you probably want to be looking at hard assets, things that can't be, that's kind of my situation. So I think that platinum group metals look good. Silver looks good. Gold's overbought right now, but buy it on a pullback. Unless it's going to be the first time in history that we have the metal rally and then the gold miners don't, outperform. They will eventually, I think. But these things are overvalued right now. Matter of fact, I sold a few of the juniors I had that I had nice profits in. But I like, oil. Uh, I think you're starting to see some consolidation starting to happen up in Canada. I've been on this whole thing about buying lived reserves, like in Canada, the oil sands. There's various operators. I'm not going to get into names. That look good to me. Offshore looks good, not just the offshore drillers, but service providers. I have a service provider in the uh, portfolio. It's going through a restructuring. It just merged with another, and they have a $40 billion backlog. So I mean, people ignore these things, and these things are all being ignored, and they're undervalued because, well, the oil price is down. Well, yeah, so that will affect certain companies, but you know, you got to sort through the wheat through the chaff. You're down at valuations that are kind of like close to what they were at during the pandemic. I mean, this is a buying opportunity. There's maximum pessimism. Even all your oil perpetual, long-term, never-ending oil bulls, like a guy like Eric Nuttall at 9 Point Partners, who's always bullish on oil, he's pessimistic on the oil price. So when you Morgan Stanley coming out and saying, well, oil prices are going to be range bound. I don't know what will happen with oil prices. Impossible to know. But when I see this much bearishness and sentiment, negativity, this is the time to be going in and buying crown jewels at. If you read about, I'm kind of jumping ahead because some of your questions, they kind of tie into this that some of the listeners sent in. Read about how Rockefeller built his fortune. He didn't just constantly buy. He would wait till there were crashes and then he would buy his competitors. He did some other uncompetitive things, but that's typically what he did. He just kept amalgamating, during pullbacks. And that's what I do. I look for companies that can still cash flow and buy back shares and pay a dividend even at $60 WTI or what have you, and with the idea that with the current underinvestment, and then we have operator after operator announcing they're cutting back on capital spending. Well, that's the cure for low prices. If they don't invest in additional resources because the price low, eventually the price goes up because demand keeps increasing. Yet if you constrain the supply, well, that's a supply demand that you learn in macroeconomic 101. So it's just the timing. It's unknowable. So that's kind of my view on that.
Okay, so you like emerging markets. You said that end of last year, beginning of this year, that's already playing out. Specifically looking at places where the left is being thanked and excused, and more rational minds are coming in. You also, as far as commodities, you like platinum group metals, specifically platinum. You like silver. Gold's a little overbought, although you see long term it's probably going to do well. And it sounds like you really, really, really like oil.
Yeah, I like energy in general just because, I mean, I don't have time to get into this, but if you just talk about like what electricity demand is going to be just based on all this data centers and all these things that are getting ready, that are happening, and you start introducing robotics, there's just hasn't been enough investment. We're probably, I've been talking about a super cycle and people are like, well, it hasn't happened yet. Okay, well, you have to be patient. I think things will, eventually are going to turn. There just hasn't been sufficient investment any where I look, but you just have to know the cyclicality of the individual resource markets. They're not the same.
Okay. Thomas is asking about oil prices. You kind of said it's pretty much unknowable, but what you do feel is that, I checked the chart today, WTI was 62. That's on the cheap side, and you're looking for deals.
Yeah, I think that with the underinvestment and the continued demand, I mean, there's only been four times people always talk about we're going to have a recession. I'm going to sell oil. There's only been four times in the last 50 years that oil demand has decreased, and that was major events like the Great Financial Crisis, pandemic, the tech bust. I mean, unless you're anticipating something like that, then oil demand is going to continue to move up at a million, 1 to 1.5% a year. We're around 104 million barrels a day. That'll keep moving higher because the S curve that these emerging markets are on and the necessary investment hasn't been made. And then, I have a view, it's shared by a minority of people, but I think it's becoming more popular that the Permian's, U.S. shales probably peaked. And if that's the case, well, that has been the thing that's bailed out the world on the supply side for the last 10 years. That cornucopia is gone. Or if it's not going to go away, it'll plateau. I remember when the shale boom started in the U.S., they were talking about 20 to 25 million barrels a day we would get to, and crazy comments like that out of some of these crazy analysts. But it looks like a lot of the we may have plateaued. It may just be a reflection of price. If oil goes to 90 or $100 a barrel, maybe a bunch of drilling rigs come back and frac crews, and John's wrong. But eventually, all oil fields peak. We know the Eagle Ford and the Bakken have peaked; they're plateauing. So when the Permian goes, that's it. You know, and so where do you go next? Where do you have to remember, people forget. They say, well, demand, John, you says a million a year. Yeah, but what's depletion worldwide? If you have 104, just say it's 100 million barrels a day, okay? Well, you have depletion, if you listen to Exxon, of 6 to 7% a year. You add another million barrels, that's a Saudi Arabia that you have to find and bring online every single year. And we have not been investing sufficiently to do that. And at some point, that's going to become a problem.
Yeah. Okay. Basically, the chart is still going from the bottom left to the top right as far as world consumption, about 1.5% a day, maybe a million barrels a year. And yeah, the Permian looks like it's kind of peaked. I did a 3 hour interview that I broke into 3 episodes with Christine Guerrero on that, where she details out her thesis and why she thinks it's happening. And you see something similar.
But I think that the next we need to see what happens with the next time that prices go up, because it just may be a manifestation of prices. But I will say, when you have just about every executive that operates in the Permian, if you listen to their conference calls, they're cutting spending. They're already telling you. They're not going to come out and say, "Hey, the Permian's peak." Chevron's not going to say that. Okay. Or Vicky Holcomb at Occidental's not going to say that. Why? Because they have to start writing down some stuff, and they'll just be like, "Well, eventually, it's an oil field. It plateaus. We may be at that plateau." Yeah, I think we are. So, but next time, if oil goes to $100 a barrel, we'll see, right? Maybe they ramp it back up, and I'm wrong, but we'll have to see. But I think that at $60 a barrel, you're talking in 2015 dollars, maybe $45 a barrel. So nobody, I think I put in 12, 15 companies have already announced like three and a half, like several $1 billion in capex cuts. So that should tell everybody, you can't make money at $62 WTI. So what about drill, baby, drill? That's a whole nother one of the three arrows that ain't going to happen. But it was never about oil. It was always about total energy. But that's another discussion. So we don't want to too far
Yeah, but
off.
if you say drill, baby, drill, your average guy can repeat it and think that
Yeah,
we're doing
exactly.
something. Okay, let's, while we're on hydrocarbons, natural gas and coal. So these seem to be pretty deeply unloved sectors at the moment. Do you think we're near max pessimism, or is there still more downside ahead? How do you see that?
Very difficult on natural gas. I mean, I just bought, before we got on here, I just bought a company that is in a special situation, a natural gas. I'm not going to give the name out because I'm going to tell my subscribers, but I think you can make some moves there. It's not something you just go out and buy. It's very difficult to figure out natural gas um, pricing, but this is a special situation that has really nothing to do with the price. Coal, I'm very bullish on coal. Everybody hates coal. And there's plenty of, some companies are struggling, but again, there's another company I like, another company that I'm probably going to be adding to my dividend portfolio. I have already started buying it myself. Even at $90 thermal coal, it's cash flow nicely. It's paying a double-digit dividend and buying back shares. It's not in the best political environment, but back to it was a spinoff from another mining company, and it's doing well. And so I think there's opportunities there. Coal use is growing every year too, thermal coal. I mean, people don't seem to understand this. The numbers that you're dealing with, for example, in the United States, every year this economy requires energy inputs of 90, something like 96 quadrillion BTUs, and people should figure out like how that's a big number. Okay. And that's just in one year. Okay. And I think it's higher now. And we're talking about, having electricity demand grow at 6% a year for the next 5 or 10 years a year because of this AI and data centers. Well, what about all the emerging markets? And so where is all this energy supposed to come from? And yes, I mean, with, if taking like some wackos like Western Europe out of the equation that seem to be self-immolating themselves. But the rest of the world is, China, India, burning more coal. So coal cheap. There's companies that are cash flowing even at these prices. They're buying back shares and paying a nice dividend. I like companies like that. And nobody likes coal anymore. Remember when coal was popular, when thermal was around 220 ton, now it's down to like 90. No one cares. It's typical cyclicality. Do I know is it the time to buy this week? I don't know. Will it take a year, 18 months, 2 years for the cycle? Who knows? All you need is another typhoon in Australia to knock out Newcastle or the loading terminal, and you could get another spike. So I think that's how I look at these things, and it's completely out of favor. When people hate it, and I think there's a guy that talks about coal a lot. His name's Matt something. I mean, you
Matt
don't see
Ward.
him. Yeah, you don't see him really talking. People don't invite him on anymore because it's not the shiny object. But I mean, he's Mr. Coal, and there's companies out there that are it's not the best environment to be in for everybody, but some companies are still able to do decent. And I like share cannibalization and double-digit dividends in my retirement portfolio. I don't see what's wrong with that. And I don't anticipate coal crashing. Who's building new coal mines? Mostly what you have is major mining conglomerates like Anglo and BHP and Peck selling off their coal mines. No one's going out and building greenfield coal mines. So it's kind of like some other analysts have said, and I kind of agree, kind of like buying tobacco stocks. Yes, they kill people, but if in the history of the stock market, that's been the best returns have been tobacco stocks since 1900 to now, 2 million something percent. So dividends reinvested. So coal, I think, is in a similar situation. Coal's not going anywhere for a while.
Okay. All right. So you like natural gas. It sounds like you're a little more attracted to coal. It is more hated. And of the two types of coal, metallurgical coal and thermal coal, you're a little more bullish, it sounds like, on thermal coal.
I mean, steelmaking coals, they're in the same boat, but this particular company I'm focusing on that I like is mostly a thermal coal producer, low cost producer, and is doing fairly well. I mean, it's another one of those ones where you can't just say, well, is there an ETF I can buy? You're going to actually have to do some homework and deep dive it. You know what I mean? Or attach yourself, create your own analyst team by going on Twitter or X, whatever they're calling it, and finding the experts and kind of like listening to them, and I'm not saying just do blindly, but they'll do a lot of the heavy lifting and you come in and, Chat GPT works pretty good for this stuff too. I do some deep research projects. It's pretty sophisticated now where you can get almost, you have to check the math and check what it's saying sometimes the sources. But I mean, if you put the work in, I think it's, and this is the contrarianism that you have to be, you know, people want to talk, everybody was talking about gold recently. Gold's overbought, but nobody's talking about coal. Well, that's where you should be focusing because no one's talking about it. So anyway,
Yep.
this
Everyone
is
wants
supposed
to
to
chase
be
the shiny
easy to
object.
understand, buy low, sell high, but nobody does it. Very few people do it. So anyway,
So true. So true. Okay, sticking with energy, uranium. Mark wants to know, are you still holding uranium or did you sell some of it?
I've got every share I've ever had. Well, I did sell like a couple years ago, like some of the juniors that had went up like 5 or 6, 700% that I had. But I'm still bullish on uranium. I mean, every week that goes by, the news gets better and better. Um, and it looks like we may have bottomed, and you've seen the spot price moving up recently. Um, I try to advocate people should just mostly just buy, the stocks like the producers are they're selling at like um, extended valuations like a Cameco, okay? But you have to look at it this way, you know, this whole uranium thing is like multi-decade. I mean, I just reported the other day, Belgium reversed their thing. Merz in Germany finally said, Germany was holding back the EU from declaring nuclear as part of the, being a renewable whatever. So now that you've got Merz in there, he's done that. Eventually, Germany will turn its reactors on. Why? Because uh, inevitably this is where you're going to have to end up unless you're going to burn coal. Renew. Notice, Steve, no one's talking about renewables anymore. Very few people. Yeah, there's a constituency out there. It's been ingrained. It has its supporters, but it's not like we're going to transition to full solar. That debate has been won. That was a couple years ago, peak that. And so now people are like looking at it rationally, like, okay, well, nuclear power has to play a role in this. If you saw the announcement last week of the Trump administration, quadrupling nuclear capacity in the US by 2040. Well, it's not going to happen, but it's good to have these stretch goals. I think the president should come out with the Secretary of Energy and people in the industry and say, we are going to build nuclear such that we are going to retake this industry from the Chinese and the Russians. And we are going to have something akin to the space program or the building of the interstate highway system. It's something that has the potential. If you build, let's say, I've used this theme. Let's build 100,000 megawatt reactors in the next 10 years. Just the spillover effects of doing that economically into STEM jobs, into trade jobs would be tremendous. Okay. And so uh, they're starting down that path of doing some stuff with the regulatory. So I think, unless you have another accident, I think long term you're going to do fine. The problem is how do you invest in it? And the problem is that you have all these penny dreadfuls. There's not a lot of big market caps. And so things get overbought. And then, people project their visions of sugar plums onto some junior penny dreadful. And then when it doesn't do what they think it should do, then, they get upset and they don't understand really what's going on in this industry. So again, things are cyclical. And you have to look at things for, but I think there's tremendous opportunity there. I think it's going to make many, many people very, very wealthy. It's already made myself and a lot of other people very wealthy, and it will continue to do that. You just have to be able to understand it, and you have to do the research, and you have to understand, what's going on and how to do it. If you have spot selling at occasionally during some of the pessimism we had in the last few months, it was selling at a 20% discount to net asset value. You're buying physical uranium for 20 at a 20% discount. Why wouldn't you do that? Why do you have to mess around with Saskatchewan Uranium that was a lithium company 6 months ago and is never going to mine 1 pound of uranium? Eventually, when you get into a speculative frenzy, all that dog crap, in a hurricane, dog crap will fly through the air, but that doesn't mean, its national inclination isn't to fly. So that can happen, but you can't play it for that. That's gambling and real speculating. If you want to be an investor, there's ways to do it. And, I think you can make money, but you have to understand, you have to have conviction. How do you build conviction? By doing work and understanding the industry. Anyways.
Okay. You're still bullish on uranium, and although you did take profits like everyone else when it had that enormous, wonderful run up, you're still in it for the long term.
Well, evidently everybody didn't do that, because I get emails and messages where people say, well, I've been in this since 2016 and lost money. How is that possible?
They never click the sell button.
Yeah. So anyways, I'm not going to get into that because then people get that. So anyway.
Okay. All right. Maybe not everybody. Hopefully, everyone watching this show. If not, we know when to do it on the next one. All right. This is from Mark. He's curious, do you invest in real estate, like rental properties, commercial, anything like that?
Yeah, when I was younger, I mean, if I want a part-time job, I'll do that again. I mean, I don't want, and why would I do that in the type of, yeah, you can probably do it in some of the red states. Why would I be a rental property owner in, like, Cook County in Illinois or in New York City or California or in these blue states where I have these increasingly, Marxist people where they're the people actually saying, I don't have, well, the whole story. No, it's too much work for me at this stage of my life. I think if I was starting out in my 20s, it's a tremendous way to build wealth because of tax advantage. I'm not going to get into all that, but it's a tremendous way to build wealth. And it's the way it's structured with leverage when you can use other people's money by taking loans. I mean, why not buy a house, live in it for, you can get a FHA loan, live in it for, I think you have a minimum of a year, fix it up, and then rinse and repeat, go buy another one, rent that one out, or buy yourself a couple duplexes or fourplexes, just build that up and let somebody else, but if somebody calls at 12 at night and says the toilet's overflowing or the hot water heater blew up, you got to go out and deal with it. You can't just say, well, I'm going on vacation, I'll be back in a week. No, there's laws, you'll get in trouble. And so you got to either have a bunch of contractors that you got to manage, subs, or you got to do it yourself. So if you're young and you're energetic and you have some skills, it's great. But then, don't be surprised you walk in there and you rent it to the wrong person and there's dog shit stains all over the carpet and holes in the wall. You have to fix that before you can rent it again. So anyway, just, I don't know in this particular, in 2025 in the US, the way it's currently the way it currently is, I would want to be in real estate like that. But anyway, it can be very lucrative, but not for me right now.
Okay. All right. And let's see, a contrarian point of view here. How do you personally handle pullbacks or negative sentiment in your portfolio? Any tips? Any tips? Any tips for retail investors who are getting rattled?
Position sizing. We have a guy on our Discord. He's really upset because I think he got caught up in some of the frenzy. I'm not going to say the guy's name. I'm not trying to embarrass him, but this is typically what happens with retail people. I get on the internet, I get really jazzed up about something I'm hearing like uranium, for example, and I go 70% of my portfolio, which if you're young, you probably don't even have that big of a that much money. And then you, of course, if you're getting jazzed up because you're listening to the internet, you're probably buying it at the top. And then you encounter the pullback. And so if you have 70% of your assets in something that declines 50%, you're probably going to be unhappy. Okay. And so position sizing is important. There's always going to be that guy that goes all in at the right time, puts his house in hock, runs up, gets cash advances, dumps it all in into mega uranium, and it goes up 5,000%. And that's what McPaper USA Today will highlight. They won't talk about everybody else. The goal that we're trying to do here is, we're trying to beat the S&P, because what most people should do, they don't want to hear this, is just buy the S&P, a Vanguard low-cost fund in dollar cost average over a working life. That's what they should do. But they don't want to do that because, I'm good at my job, so I should be able to invest. I can beat the market. Most people can't beat the market. And so that's what happens. So you should have conviction. How do you get conviction on an idea? You understand it better than anybody else. You understand what's going on. You understand who the management is. You're going to be messing around in resources. You better understand who's running that company. Who is this person? I mean, I was given, have they had previous success? Why? I'm in business with these people. I'm a shareholder of a business. I am part owner of this business. Do I have confidence in these people that are making the day-to-day decisions? They know what the hell they're doing. Most of them don't, especially in an industry like mining, which is a horrible business to begin with anyways. Okay. And so having conviction, that means understanding the thesis, writing it down, revisiting it. Is it still in effect? Do I understand the cyclicality? Do I understand the industry? Do I know the history of this whole thing? Blah, blah, blah. And then position sizing. If you have 2% of your, let's say you have one, for very speculative ideas, 1% of your portfolio is the biggest you go. So if you blow it up, you still have 99% of your assets. But if something does a 10 bagger for you, it just became 10% of your portfolio. This is how real wealth is created. And what people do is they're inexperienced, they're emotional, they want to get rich quick, as Charlie Munger used to say. And you cannot get rich quick. Okay? This is the thing. Have $1,000. I read about a guy that did this and he turned it into $1 million. You're not going to be that person. Just if you can compound, look at all these people that have compounded over the years. Peter Lynch, Buffett, Munger. Just try to compound and not lose money, and you'll become very wealthy over time. It won't happen in a year, but I've had many, 2, 3, and 5 baggers. I've had only a couple 10 baggers. Okay. And they can be life changing. But you don't go all in, which you see these people, it's kind of like gambling. You might as well just take your money. If you're going to go 70% into a speculative idea, just get on a Southwest flight and go to Las Vegas and put all your money on a roulette spin on red or black. It's the same thing. You don't, the outcomes are not 100% knowable. So you're dealing with probabilities. And so position sizing protects you. And if it gets to the point where your stomach is hurting and you can't sleep at night, then just sell. And this is the cardinal sins that retail investor, they don't understand. They're not investing a lot of times. They're speculating. They don't even know it. Investing is buying real estate properties and renting them out and slogging along for 20 years and then having equity in these houses. You own 10 or I know a guy, he buys one rent house every year since he's been in 21. Okay. By the time he's 40, he's going to have 20 rent houses. Okay. Half of them are going to be paid off. He's going to have several $1 million in equity. He doesn't have to work anymore. But that's 20 years. People don't want to put the 20 years in. I know a guy that started off in fries at McDonald's. We made fun of him at 15. He's a big shot in South Florida for McDonald's and owns a bunch of stores. But he's been there for 40 years. You see, you got to put the time in.
Okay. All right. So what I hear you saying is position sizing is basically don't don't throw all your eggs in one basket. Uranium probably doesn't deserve 70% of your portfolio. Also, have a lot of conviction. Understand the company. Understand, most importantly, the people behind it, because literally what you're doing is you're buying a piece of that business, and these are the people that are going to be running it for you. So you ought to be able to trust them. And if you find yourself staying awake at night over a position, maybe it's just time to hit the sell button, or your position sizing is too big and it's causing you distress. Does that about sum it up?
Exactly.
Okay. Okay. Um, let's see. Okay, biggest misconception. What's the biggest misunderstanding you see in retail investors about commodity investing?
That they're buy and hold. They don't understand cyclicality. Mr. Rick Rule talks about this. There's a management team that runs a company called Altius Minerals. The guy who's the CEO's name is Brian, I forget
Brian
his name.
Dalton.
Yeah. Probably the best managed, understands cyclicality on commodities better. Read their reports, listen to them. What does Rick Rule say? People like to say stuff. He actually, he's a billionaire or close to, so he knows what he's talking about. Some of the stuff he says is kind of out there, but he knows what he's talking about. You have to make volatility your friend. You have to understand cyclicality. Uh, and if you look at the guys at Altius, they've been doing that for 25 years over there. They're experts, and that's why they've been compounding capital over time. And so I think the problem is people hear something and they don't understand these are cyclical businesses, that low prices cure low prices, high prices cure high prices, and they're not buy and hold. These are, as Doug Casey says, burning matches. Okay. These are not heirlooms. These are vehicles that have, as I said, mining and resource extraction is typically horrible business. It's a net destroyer of capital. But there are times, like right now, in the gold mining is a perfect example, where you have the prices went up quite a bit and you have excess profits being generated. Okay. And typically but you have to understand when you can capture that. And then you have to capture that and then you have to sell. Because the problem is people start getting recency bias and they get anchored and they think, man, I got this stock and it went up 200% and I'm going to, it's just going to keep doing that. It's not going to do that. If the price gets high enough, believe me, enough capital will come into gold mining. There'll be more gold mined than, this is just how things work in copper and gold and oil and natural gas. And the problem is, I think, with a lot of retail people is, a buy and hold investment is, getting into the partnership with Berkshire in 1964 with your original 10,000 and it's worth 244 million now. That's investing. Okay, that's compounding. Fairfax in Canada, for example, that's run by the Warren Buffett. Those are investments. You buy and hold those. They're compounding capital. These things enjoy excess returns for short periods of time. They're like shooting stars, and you just got to capture it. You have to understand it. It's hard. I'm not saying this like I'm sitting up here as the fount of wisdom. I learned all that. I had to go through this. Okay, that's how I blew up my account. I'm not going to get into that in the show, but when I was younger and inexperienced, you just think it's going to continue, and you get caught up in the emotion. Well, it's already went up 3 or 4 times. What if it goes up another 4 times? I can live on, an island in the Caribbean with a bunch of girls and rum drinks forever. You actually start thinking like this. I'm being facetious, but you know what I mean. And if you're not experienced, if you don't know market history, then you get caught up in this and you get blown up. And then when it turns against you, well, it'll come back. It'll come back. Next thing you know, you've given everything back. It happens all the time. That's the biggest misconception, I think, for retail.
Okay, they think it'll go on forever. They don't take profits, and they don't understand that these things are cyclical.
I mean,
Okay.
if you're, let me just say one thing. If you go down to talk to any financial advisor that is endorsed by the SEC, your Edward Jones guy, he's going to put you in like I said, this is why they started those Vanguard funds. If the long-term return on stocks with dividends invested over a long period of time is 9%, if you have a stock that goes up 400% a year, man, you hit the lottery.
Yeah.
Take some profits, but people don't do it.
Yeah. At
Anyway,
some point, you got to pay yourself.
yeah.
Got to pay yourself. Okay. This is the point of the show, John, where we take a sip of coffee. And we got a question on politics here from CJ. and he says, can we get a department to put a stop to political corruption?
It's not going to happen. And this betrays a mindset. Okay. Uh, you have to understand that I think a lot of folks are looking at this like, well, the people there are just like me. They're not like you. They have a mental defect. They are sociopathic or psychopathic personality types. People say, oh, come on, John. I've been around corporate CEOs. They have the same thing. Okay. I've never met a politician that wasn't a freaking bum, including Ron Paul. Okay. And read a book by Harry Brown. He's a libertarian guy. Before all these people saying how to live free in an unfree world, you don't spend any time on politics. No one's going to come down and kiss your life and make it better. These people are there for their own self-interest. They don't give one iota of a shit about you. No one's going to create an we just talked about this earlier. They're not there for you, okay? They're there for themselves. Okay, if you want to go back to the 1700s when Davy Crockett was a congressman and he talked about he was a two or three terms, and gentleman farmer goes to DC, or the guy that had a shop in Boston goes and serves for a term. That's not how it is. It's a career now. Okay, and it's all based on money. You need money to run, so you're always going to be compromised. What kind of a person, Steve? I don't know if you're a married man. For CJ, if he's a married person, if your spouse or significant other constantly lied to you about everything and never followed through anything, would you stay in that relationship?
Absolutely not.
Okay, well, if you were in a business relationship with someone and they constantly lied and betrayed you, would you stay in it? I mean, so what's different about this? Okay, we are herd animals. Okay, we are followers. We had to do that during, 10,000 BC because the herd, you needed a bunch of people, the tribe, to bring down a Macedon and protect the tribe against, saber-toothed tigers and, the other tribe, like in 2001 A Space Odyssey, the proto-humans that start fighting over a water hole. Uh, we live in now in division of labor, and it's different now. Okay. But those same instincts are there. So people seem to have this desire to look for this leader. They don't want to take responsibility. Somebody will save me. Somebody will lead me. All I have to do is go in and click for this guy, and he'll come down and personally kiss my life. And this is like, I don't want to be mean. This is naive. And so, no, they're not going to. They did it with Doge. So you have senators and congressmen standing out there every day talking about doing everything they can to block it. And you have federal judges exceeding their authority, in my view, doing everything they can to block finding waste, fraud, and abuse. Because these people have been stealing for years. And, they want who they're incentivized to do that. Why does every congressman go or senator go to Congress for the large part? Most of them are not super wealthy. Come out. Obama was in there for 8 years. I'm not just picking on him. They're all the same. He's worth 300 million. Where'd the 300 million come from? I mean, the thing we talked about Mike Johnson about, this so-called conservative. So I think it's naive to think that there's no constituency among the population for spending cuts. This Doge thing isn't going to do anything. And they just put the biggest, best bill through ever. It's going to increase spending. No one's going to cut spending until this thing blows up sky high and the currency gets cratered. And then, as I've said before, I'll make a provocative statement. That'll be the end of the United States as a political entity. You'll have many countries on this continent. So anyway, that's down the line, but that's what I think about that. That's just being naive. No one's going to save you. No one's going to fix it. Mr. Smith Goes to Washington was a movie.
Yeah. Yeah. Okay. No politician is coming to save us. They're in it for themselves. So you can basically wish in one hand and you know what in the other, and we'll see which one fills up first.
I mean, I'm not trying to be cynical, but that's just how it is. Remember the Tea Party? What happened? The debt's higher.
Yeah.
Don't hear about them anymore. They're long gone, and the debt's even higher, and it will continue to do that. Anyway.
Yeah. Okay. Do you have any? Do you have any final thoughts, John? Is there something that I didn't ask that I should have?
No, I just continue to maintain that there's going to be we're in an era of tremendous volatility socially, economically, politically, around the world, geopolitically. And I think that's going to create a lot of volatility. We've seen that with this recent trade stuff, but that also creates opportunity. And I think if you approach it, people accuse me of being black pilled or cynical. No, I think this is a tremendous opportunity if you can get past biases for being able to take advantage, because things are going to change as constant. And when we have volatile situations, it creates opportunity for those that can see beyond the headlines. So I would suggest people focus on that and not get too down. There's nothing you can do. There's 330 million people in this world, in this country. You're not going to change their views to your view. And so you say, okay, well, I could tell a story one time about a guy that I knew that was in the Soviet Union and accumulated $30 million in wealth, because he had like a photographic memory. He just manipulated the Soviet system. It was so slow and decrepit. That's a whole nother story. But, um, if you can't beat the people at the DMV to stay ahead of them, well, that's a whole nother discussion. So anyway.
Okay. Change is constant. You see increased volatility, and I'm like you. The more volatility I see, the more excited I get. Nothing's more boring to me than a chart that's just moving sideways. That's where the real opportunity is and where we can make some money.
Absolutely.
John, thank you very much for your time. If people want to follow you and your work, how can they do so?
I'm on YouTube. I have the weekly market report. Then I'm on Substack, Actionable Intelligence Alert. Just put that in the search, and I have a free weekly newsletter that comes out, cataloging what I'm looking at, curated things that I'm looking at, and then I have the monthly newsletter where I get more in depth into individual ideas to kind of take advantage of some of the things we've been talking about.
Awesome. I will put links down below. John, thank you for coming back on the show.
Appreciate it.
And thank you for tuning in. Go to stevebartonmoney.com for more and have a wonderful day.